Hi folks, Stratman from pipware.com again with strategy training. We've been talking about fractals and how useful they are to determine trend as opposed to maybe moving averages. Moving averages are a lagging indicator because they rely on a number of points in the past. Like in the case of this moving average here, it's an SMA 20. It requires 20 previous candles to determine its current value. So it's going to take a while to determine that this has gone into a downtrend here. So you won't see that that's a downtrend until somewhere out here. Whereas if you use something like fractals to kind of give the idea of where swing lows and swing highs are, you may be able to get a better entry. So that was the previous discussion. Now, one thing about fractals that you have to be mindful of is that they're not drawn all the time where you would hope they'd be drawn. You do get a few that end up in odd places, like theoretically this is the swing low here and this is the swing high here, and in fact within here we've got a low fractal and a high fractal here. Now we wouldn't call this a swing high typically, but fractals are just a simple way of showing where little peaks and troughs are, and they're just very simply the preceding two candles and the two candles afterwards, what's going on with them compared to another candle. Have we formed a peak or a low? So you have to keep that in mind as you're watching what goes on with fractals, because sometimes when you see one of these arrows form here, are we really seeing a change of trend at this point? Because what we got was a lower high and a lower low, but we've got a very strong uptrend here. So we've got to kind of visually look as well as try and automatically go by what fractals are doing. For me personally, I don't show the fractals and the arrows on the chart. It clutters it up, so I'm just going to take those off. So all that we're going to be left with is the dashboard with a couple of charts here. I'm going to get into the charts shortly, the mini charts, because they're part of the strategy too. Okay, so we've got a much cleaner looking chart here. Now visually I can see where the swing lows and swing highs are. That's enough for me. I know where fractals are going to be drawn because I know about the fact that there are two preceding and two after, so there will be a fractal above this point and there will be a fractal below this point. But what is important to me is knowing on every time frame whether we're making higher highs or whether we're making lower lows. That's this. So at the moment on H1 we're making higher highs, but I'm now seeing that the M1, the M5, M15 and M30 have all been changing backwards and forwards to a downtrend, so potentially H1 may fire soon as well. So if we switch over to our H1 time frame and we have a look and we see where our previous H1 fractal would be, I would hazard a guess it's forming a new H1 fractal right at this point. So the cool thing about fractals is that once we get a point of consolidation like this, we get fractals either side of this as the lows and highs are made. So we're very shortly going to see a fractal. In fact, if I turned on fractals it would show a fractal there, but if this broke, that fractal would disappear. So just something to watch with fractals as well. A fractal isn't confirmed until the close of the second candle after the point. So at this point, if price drops below this, if it forms a fractal, say on the next candle drops below that, what we're going to see is all of these change to red, indicating that we've got a downtrend. Now that kind of bodes well for me because I'm seeing also at the same time I've got my slower moving average and my faster moving average both in a position where I would normally be considering to go short. So once I see that the fractal break, I see all these break, I'm really interested in a short trading opportunity. And conversely, if price goes above now and breaks the previous H1, well, it's actually still considered an uptrend. If all these changed to green here, I know that I'm making higher highs on every time frame. So I would be considering now entering long. So that's really the business about fractals. So what I did was, on this particular template, I've set up an alert just solely based on the fractals from M1 to H1. So, because it's quite stressful sitting there watching your charts, and if you can be doing something else and then get alerted when, say, all of these turn green or all of these turn red, it's not an indication that we should come and jump on and trade. What it is we've now seen that the trend has changed on every time frame to a uptrend or a downtrend, so according to fractals. So then it's really just a call to come and look. So we'll start looking at our charts and seeing what is going on with price action. Are we in a really tight consolidated range, and will the fractals easily switch back the other way and take us out of a trade? Maybe. That's why sometimes we might want to consider having our ADR wait here, and we're waiting for 40 pips at this stage to occur within here, maybe before we start trading. That's a rule you may want to use. You might want to change that to 20 pips or 50 pips. Who cares really? It's up to you. It's up to the individual. So now let's say that once we know which way we're going to trade, then we're going to start considering that we want to look for pullbacks. So this is where we look for pullbacks, and what I like to see is I like to see either the M1 or M5 change. So if I go over to, I'll just check around some of the time frames and see if we've got a similar situation. So I've just gone, what I meant to say there was, I'll go around not the time frames but the different currencies. Now what I'm seeing here is I'm looking at the pound, and I've got one of these situations occurred that I like. So I got an alert, we would have got an alert, sorry, when all these were green, indicating that a long trade is possibly on. Now what I look for is a pullback, and clearly the M1 has broken its low fractal. So if we go down to the M1 and just take a look at what's going on there. So it's had a move up, and then now it's pulling back. Now what we'd be interested in is the end of that pullback to go long, because we're only interested in trading in our direction after we get a pullback. So pullback is occurring on M1. We'll go to M5. Now on M5 there's the previous low fractal. So if it goes below this, then this will change red as well. So I particularly like when we're sitting on some kind of support or resistance and seeing that we're pulling back onto that support or resistance via the M1 fractal getting broken, and then entering to go long. Now once I get this alert, I then am looking at down here. I'm waiting for a pullback. We got one. Then I'm looking to my THV, M1 and M5 and my stochastics to see where the best entry will be. So this is the kind of trade setup that I look for. So back to M15. You know, our moving averages are saying this is potentially a long trade. Some people will be saying, well, look, you know, I've had a 1, 2, 3, maybe we're going short. Well, maybe it will go short, but I tell you what, all the time frames so far are saying that we're making higher highs. So I'm not going to go short when it's saying that. So, but also my THV is saying M5 and M1 are going downwards. So I'm waiting to see this all change over, and that'll be the subject of another video. So just for the time being, understand that it's good to get a signal saying that all time frames are in your favor in either long or short. You're looking for some kind of pullback on the M1, M5 kind of area, depending on what time frame you trade, and then you're going to use your stochastics and THV to help you enter in that direction in the best possible way.